So Credit Suisse's shares this week reached their lowest level in their entire history. Let's talk about it and look at the chart. They're at 2.55 Swiss francs per share in dollars, which is a little bit more, but not by much. And you might rightly ask, so what? This week, there has been misleading news from the Swiss Federal Financial Market Supervisory Authority that was allegedly expressed by the president of Switzerland's second largest bank. What worries me the most is that Credit Suisse's president's name, Alex Lehman. The Lehman name brings back strange memories. Jokes aside, the scandals that have affected Credit Suisse, or even the losses of $7 billion in 2022, do not cause a stir. What causes a stir are the president of Credit Suisse's words, who reportedly made potentially misleading statements about the client's capital outflow. This has led to statements that have caused a so-called run on withdrawals. If you know that a bank is about to fail, you go to withdraw or transfer your liquid assets. Banks need your money to survive, because if everyone withdraws all the money from a bank, it will fail. Obviously, you don't withdraw in cash because there is no money in cash. 97% of the money in circulation in the world is digital, and even though it may seem strange to some of you, only 3% is cash. That being said, if you withdraw your money digitally, the bank will still collapse because it plays a shell game with your money and the money it creates out of thin air. So, I don't know if it's clear, but there are no specific rules or controls. There is no longer a money laundering scandal, but what does it matter? They may have used Bitcoin to launder money. The accusations are of financing terrorism and mafia money laundering. Cryptocurrencies are always used for this kind of activity, even though their market capitalization is really small compared to the amount of fiat money created, which is obviously used for money laundering and other illicit activities. This doesn't even make news anymore. The losses in 2022, although significant, resulted in only a $7 billion drop in Swiss stock prices. But there's worse news because there are reports of capital flight. Now something should be clear. Credit Suisse is one of the banks that are too big to fail. It will be saved for sure. However, let's imagine a storm and suppose they have to be saved again. If another bank falls, the systemic risk of interconnected banks becomes the #1 danger in the Eurozone. The only question you should ask yourself is if you have a safe bank. If you have money in big systemic banks in Europe, USA, or elsewhere, it's not a good idea. Look at how their stock prices have fallen over time and the dirty things they've done. This is regardless of what the newspapers say. So, let's look at the financial solidity of some of the parameters, but let's forget about that. I don't want to get too sidetracked. If a large systemic bank falls, it's possible that your bank could fall too, okay? Because ultimately, let's be clear, if these gentlemen want to get controlled money, managed through wallet portfolios directly from central banks, as for the central digital currencies projects, then everything in between needs to be remodeled a little bit. Well, you've reached the end of the video. If you are interested in learning more about similar topics, here you will find other really interesting videos from the channel. Thanks for watching this video. Click on the like button if you enjoyed it, and do not forget to subscribe in case you didn't. See you on the next one.